Hey, welcome back everyone. You're tuning in to howtoplaystock.com. My name is Casey. Today is December 20th, 2017. In today's video, I'm just going to give you a rundown or an update on the markets real quick, the broad markets, and then we're going to get into a strategy that I discovered through a multi-millionaire mentor of mine, and he shared this with me the other day, and I thought it was brilliant because it goes along with the slogan to my YouTube channel, which is "Income is the Outcome." And it's not necessarily geared towards day trading or swing trading your way to wealth. Okay, now the approach is similar in regards to making a trade, but this is more like long term. So this could, potentially play out for your entire life when it comes to, going for like an income strategy type approach with dividends. So I'll explain that here in a minute. First off, I'm gonna go ahead and run off the numbers for the broad markets. So the Dow Jones right now is at 24,753 points. It's down 0.0054%. S&P 500, 2,682 points. We're up 0.019%. The Nasdaq is at 6,955 points. It's down 0.12%. So the markets really aren't doing much right now. Now, if you go look at like the crypto market, for instance, or cannabis market, that's a different story. So if you're looking for some returns and you're looking for a little bit more volatility, you might look at those two markets rather than the broad markets right now. So for today, though, this is a long-term kind of swing trading strategy. That's what I'm labeling it because it's more long-term. And I thought this was really brilliant because I'd never heard this before from anybody. I was kind of doing this already in my swing trades back when I was day trading volatility about almost 3 years ago. But I never used it with a long-term strategy approach when it comes to like my long-term assets that I'm invested in. So basically, what you do here is, and this is coming straight from my mentor, one of my guys that I talked to who shared some information with me on stocks and investing. He's a multi-millionaire, so when he talks I pay attention. But he said basically what he did, he picked strong stocks or ETFs that are paying dividends. So in other words, like what he did is he would pick a real solid company like AT&T or Coca-Cola, a company like that who's been around for a long time and paid out dividends over a long period of time. If it was an ETF or something like that, it would probably be like more of an index type approach, so it would buy up broad markets or buy up 50 of the strongest paying dividend stocks, for instance. But what he would do is he would pick a strong asset that is fairly stable with its dividends. The second thing he would do is he would buy at a specific price that's affordable, and that's the thing. You want to make sure that this is affordable for you, all right? So it doesn't necessarily, it doesn't matter what I buy in at because my price is going to be much different than everyone else's. So make sure it's an affordable price for you, whatever that might be. And then the third thing you want to do is sell at a specific price, okay? And you're going to buy at a specific price. So basically, the reason why I call it a swing trading strategy is because, for an example here, let's say you buy Coca-Cola or AT&T, for instance, okay? And let's say your buying price is at $42. So you're buying in at $42, and you want to sell when it hits like $48. So you could go possibly 6 months to a year while it's at $42 before it even gets to $48. Okay? Now you may buy in if it goes to $43 too. It's just completely up to you what you want to do, but you're buying at this low price right around $42 range, somewhere give or take, a dollar under or a dollar over that, or right at $42. So you buy in there. And then when it hits $48 or somewhere around the $48 mark, you're selling. And like I said, it could take years for it to get to that price. Another thing that I found beneficial for people doing it this way, if you're paying, if you're in a stock that's paying strong dividends, a lot of times what these companies will do is they'll do a stock split, and I've experienced this a couple times, and this can help compound your income that you're making off of these investments. Because what happens is a stock split, for instance, will go like 2-to-1 stock split. So for each share that you own, the company will split it so that you get 2 shares for each share that you own, and you end up accumulating more shares. Now, when that happens, though, because I've experienced this with a utility company that I was invested in, what happens when they split the stock like that, usually the price will come down to a more affordable price so that they can still entice and keep investors coming back in to invest in their company. So that's what happens when the price gets too high. A lot of times they'll do a stock split. They revalue the shares at a lower price so people can jump back in. The people that were already in are benefiting from this. So that's one benefit to doing it this way. That doesn't happen every time as far as stock splits. So they may not split the stock at $48. In other words, you could sell at $48 and it could keep climbing to like $60, and then they do a stock split and it drops back down and within your buying range. Okay, so I want to be clear about that too. But back to what I was trying to get at here is I'm looking for flaws. Okay, I'm looking for flaws here, and I really can't find any with this strategy. If you're using this strategy right now, go ahead and leave your comments and let me know how that's working for you. Because again, I think I'm going to start using this type of approach for my income strategy on my dividends that I'm kind of buying and holding long term. And the reason why, again, is because if I can sell at $48, I'm making a profit, right? And when I sell, I lose my dividend because I'm no longer invested in the company. But I can hold that cash that I've made and just wait for it to hit $42 again. Okay, so I might be out of that trade for a while, but if you know how to read charts, you probably shouldn't sell if it's continuing to go up. All right, so I don't know. I mean, maybe that might be one flaw that I've seen with this, is that if you sell, say at 48, and it just keeps going to 60 or something like that, you might miss out on more opportunity to make profits and compound your dividends. So that might be one flaw. But honestly, I mean, if it continues to go up, like I was saying, and you got a good stock, more than likely, if it gets too expensive, they're gonna go ahead and do a stock split, and it'll come back down in price. So if you're okay with waiting and sitting on a good pile of cash that you've made from the profits, it's a win-win there. The other thing that I like about it, and I forgot to mention this, was that let's say you buy in at $42, and let's say you're waiting for it to go to 48, if it turns against you and it's let's say it drops to like $38 or even $30 or on further down than that, and it's going to take you years for it to get back up to $48 because maybe we experienced a correction in the markets or something. Well, if you've got a stock that's paying a strong dividend, you're not really losing because you're still getting a paycheck, and your paycheck is dollar cost averaging in, so you can buy at lower prices, if that makes sense. So you're not really losing when the trade goes against you too. And this is how my friend has accumulated massive amounts of profits and basically became a millionaire doing this. And I don't know why I didn't talk to him sooner or reach out to him about this, but he told me what was going on and with his strategy and what he had been doing for the last probably like 15, 20 years. So I thought it was really a brilliant strategy. Thought I would shoot a video on it. And that's all I have for today, guys. So, if you like the video, go ahead and hit the like button, share it with other people, because I'd like to get some feedback on this strategy and see if anybody else out there is like using a similar strategy to this, and let's see, from people that might be using that kind of strategy, let's see their feedback, because I'd like to know how it's working for them. Anyways, you're tuning in to howtoplaystock.com. These are today's investors' investing tips. And remember, guys, income is the outcome, okay? I'll talk to you later.